Hello hustlers, in today's video I found a Cathy Wood message for all investors in speculative stocks such as Archer Aviation, Joby Aviation and Rocket Lab, which is an interesting viewing for all investors to see where the market is heading. Right, let's jump in and see what Cathy has had to say.
Greetings, everyone. This is a very active time in the market, I don't have to tell you. But this week, the VIX crossed 65, which is the fourth largest measure of volatility in the market, really in the last 40, 50 years. And I've been around for all of them. So it's fourth after 08, 09. The tech and telecom bubble in 2000, and
Now, volatility can be good. You have to act like a shark in these markets. When there's blood in the water, you feed. You buy on the red days. When it's going swimmingly, all the way up, you just swim with it. Don't react. Just hold.
1987. Now, what does this mean, this volatility alert? It usually means the market is meeting a cathartic moment, or is in a cathartic moment. And it usually means something is changing. And as you know, we have believed for quite some time that the U.S. economy and maybe the global economy has been going through a rolling recession ever since the Fed started raising interest rates. Well, the other thing that was happening during that time, apparently, was an increase in the carry trade involving borrowing yen, so really shorting yen, and buying.
And this is what caused that massive pullback in the market the last few weeks, and loads of investors got margin called. So always be careful when you're leveraging.
Dollars and investing them into higher yielding assets than in Japan. So playing the spread. The other reason this became a very widespread trade is the yen has been depreciating. So shorting yen meant that the investor or the speculator was benefiting from the yen going down. Well, that changed abruptly this week as the Bank of Japan increased rates more than expected and seemed more determined to continue increasing rates than many people expected. So apparently, lots of margin calls and a sell-off in a lot of assets. And now the VIX has calmed down. Now, we're not sure if the carry trade has unwound completely. JP Morgan is saying we're halfway there. So perhaps we'll see some more volatility, but I do believe that the Fed now is on high alert because the stock market seemed to be encouraging the Fed to hold tight, higher for longer, make sure that inflation was out of the system. And as you know,
now this is where you Archer, Joby and Rocket Lab investors have to have your ears tuned now. The next piece she's about to say is really interesting, and make sure you delve deep into this.
We've been saying for quite some time that inflation is unwinding much faster than we're seeing in the traditional indexes. Right now, the CPI is at 3.1, but by other metrics, we're seeing prices fall. And we would not be surprised to see prices fall a little more broadly as the consumer weakens. Now, why is the consumer going to weaken or continue weakening? We believe it's because corporations are losing pricing power. And in order to salvage margins, they're going to be doing two things. They will be laying people off, and they will be accelerating moves to increase productivity. So the unemployment rate will go up. That certainly is getting the Fed to change its spots, as we're listening to
Now, as the employment rate goes up, it's more likely to make the Fed rate go down.
Chairman Powell. And I think now that household net worth being hurt by the stock market going down is another reason that the Fed is going to relent. Now, one last thought here. Interest rates coming down should be very positive for the equity markets, but they will not arrest a recession very quickly. In fact, if consumers and businesses know that interest rates and maybe prices are coming down, what will they do? They will wait. Now,
which makes sense. If you know prices are coming down, you are going to wait. In essence, what Cathy is saying is we can maybe see a bit of a push down for a while. However, we will start seeing the speculative stocks start to rally as rates start dropping.
The market in its wisdom, we believe, is already understands much of what I have told you. And so we do think that lower interest rates, when this carry trade is completely unwound, that lower interest rates are going to be the defining factor in terms of a rotation in the market away from a very concentrated group of stocks to a much broader based group of stocks. And as I just mentioned,
and as the money comes out of the Magnificent Seven, it'll start diluting down into the speculative stocks.
Innovation solves problems. So productivity gains are certainly what we believe is going to happen as AI proliferates throughout the global economy. So we just wanted to give you some insights based on lots of years of experience, having experienced these volatility cathartic moments. It usually means there is a rotation into a new kind of thinking underway. And we do believe that will play out during the rest of this year.
So take it as you will. What I'm getting from this is we're starting to get quite frothy in the stock market. The market doesn't know where to go. I believe we're going to get a little bit of a pushback down. As rates start coming down, you might get a new pump due to the presidential election. I think we're going to rally coming into mid-25. Alright guys, if you've got a bit of information out of this, please hit that subscribe button. It means the world to me. Alright guys, catch you later. Peace out.